Certainly, thank you, Ben. We've got a wonderful, prestigious group of panelists. I'll go through them very, very quickly. And apologies if I don't get the names pronunciation exactly right. Dr. Jorge Kukies, State Secretary, Federal Ministry of Finance, Germany. Stijn Claessens, Head of the Financial Stability Policy and Deputy Head of Monetary and Economic Department at Bank for International Settlements. Andres Courage, MEP, Committee on Economic and Monetary Affairs, European Parliament. And last but not least, Sultan Meji, Chief Innovation Officer at Fintech, at the FDIC. Okay, so let's get started. So what I'd like to do is to ask each one of you, in your important roles, what either keeps you up at night as a regulator or gets you very, very excited about all of the innovation which is going on in the sector. So just one topic, one term. Shall we go through, Sultan?
Well, thanks for having me, Victor. This is great to be here. I would say the first thing that keeps me up at night is human capital. There are just not enough people with strong technical backgrounds who actually understand these technologies in the regulatory system doing things like that. You know, I've been in AI for nearly 30 years, and I'm an outlier from that perspective. And so I think we can't do enough to get enough people with technical backgrounds into these kinds of discussions.
Thanks. Hugh?
Thanks a lot for the invitation today. And perhaps now I'll say the same as Sultan, being on the educational side. Human capital, definitely, and what I would call perhaps even broader than that, the digital divide, which is, we haven't talked about the digital divide for a long time, and we're starting to see it again between those who have the skills and those who don't, between the haves and have-not, which is really linked to what they know about the digital economy. This is something that we're seeing very, very quickly happening around the world, and not just for people who usually didn't have a lot of university degrees. We're starting to see it even for very, very qualified people. So I would call that the digital divide. Huge risk, but also huge opportunity for those that have it, and for the organizations that manage to upskill their employees.
Thank you, Hugh. And I apologize. I forgot to introduce Hugh, who's the co-founder of CFTE. So thank you. Stijn, over to you.
Well, thanks for having me on this panel. Well, as part of the regulatory community, we always worry a lot that things kind of run away from us too quickly, and we haven't our regulatory apparatus fully in place and the supervisory part to it. In that respect, the developments are moving very quickly, particularly on the payment side. And I would really highlight the emergence of big techs in financial service provision, including payments, and the possibility that they may launch a stable coin as a new instrument, and that would really change the world quite a bit. So that's something we need to be ahead of the curve, and that's what's keeping us awake at night.
Thank you. Dr. Kukies?
I would say, in addition to the things that I've mentioned, I would say crypto fraud and one of the multi-billion stable coins not proving so stable would be a big risk that I see. And many thanks, and I look forward to a good discussion and to elaborate a bit more on these topics and others.
Andres?
Yes, thank you for your question, and thank you for having me. I think I would join colleagues. Definitely, what is fascinating and what is also the source of concern for us is actually the high speed of innovation. And on the side of regulators and legislators, it's always a concern whether the regulatory framework that we are about to adopt would fit to the dynamics, would actually match that speed, what we can do so that it's not outdated when it's in place, but it's also allowing for that innovation to grow and to speed up. So I think that's one of the key concerns we have.
Okay, so let's go to the first big question. Big tech is playing a very, very big role in all of these different markets. Now, we all know that there is increasingly a multipolar approach to this area. Obviously, China has made a lot of noise recently, the US. So what is the general approach of regulators in Europe, Asia, and the US towards big tech's move into fintech and its impact in the whole fintech pond? So I'm going to go to Stijn first. Stijn, your thoughts?
Yeah, thanks for asking that question. Maybe useful to just to summarize a little bit what the current situation is and what's at stake. And I already alluded a little bit to that in the sense that the rapid rise of big tech firms is really changing the financial service landscape. They brought a lot of benefits, of course, including through innovation, help lower the cost of financial services, and there's a great potential for further doing that, including by enhancing financial inclusion. But there are these risks that keeping us awake at night. So we have to try to find the balance, and I think that is where the challenge comes in. If there's no regulatory response, I think the big techs could easily establish a very large footprint in the retail payment space, providing their own means of payment, and that can become a closed network. In that sense, have challenges both for financial but also for monetary stability. So it's necessary that big techs don't operate their own payment system, but have an integrated system that's accessible to all. But if they were to launch a stable coin, particularly for instance for the exclusive use, like was suggested in the Libra, but also in the Facebook DM context, that could lead to very rapid and large-scale adoption of these stable coins. And then we have even more market power concentrated in the hand of a few. And that would threaten financial stability, but also has challenges for competition and for data governance. So this stablecoin is important also because it challenges bank business models, right? Especially, particularly those that have deposits are going to be disintermediated, and that would make banks more difficult to perform the intermediation function. So then also, as I mentioned, they could fragment the monetary system. This is not only an issue for emerging markets where you could see a form of dollarization or DMization, but it could also be the case for other areas. So we have to act here. I think we have a toolkit and an approach ready in some sense through same activity, same regulation. We have used that in many contexts already, but it's not sufficient, I suspect. We need to do, in addition to that, an entity-based regulation. So to really look at these regulatory issues from the point of what is big tech special about it, and should they have some other regulations applied to them specifically. Now, you already mentioned countries are moving ahead in this direction. I think this is exactly along the lines I noted that the entity parts are being put in place in China, the US, and Europe to prevent particularly the data misuse and anti-competitive practices. But it's not necessarily sufficient. We may have to do more because the potential impact of these big techs goes beyond the financial sector. There's also elements of where they provide cloud services and the inputs into financial service provision, issues of cyber risk and the like. So we need a comprehensive approach to deal with these things, I think, as a regulatory community. Let me stop here.
Dr. Kukies, I know you have some very developed thoughts along these lines.
Yeah, so I agree with what Stijn has said, so I won't repeat the specific points. I think what's very important is that we at the European level move ahead quickly on the legislative proposals from the Commission on the markets in crypto assets and the Digital Operational Resilience Act, and we'll be discussing those with Andre and the team in the European Parliament soon. At the moment, the debates are going in parallel in the EP and the Council, but we'll be very soon ready with the trialogue and getting the legislation moved forward. And I think the key question, as Stijn has elaborated, for the general global perspective for the European Union is, of course, on the one side, fostering the innovative power of tokenization and using the innovative spirit that's on the blockchain and DLT space and combining it with consumer protection and making sure that what keeps me up at night, namely, stable coins not being stable, doesn't materialize. And I think Mika is really the instrument for that, together with Dora, and of course the other two elements in the Digital Services Act and the Digital Markets Act that will also help us with fostering competition. And I think that's my point number 2 on big tech, is apart from the question of challenges to sovereignty of the euro through stablecoins, is of course the issue of competitiveness and making sure that the innovative power isn't circumvented or prevented by oligopolistic tendencies and exclusionary tendencies. In Germany, we passed legislation that obliges the big platform players to open their NFCs, for example, and to open their APIs, and to prevent anti-competitive behavior. Of course, some of the big techs didn't like that legislation, but it's showing that it levels the playing field between financial service providers and big tech, and actually leads to higher competition. And we're very happy that the Commission is taking up some of those impulses in the European legislation as well.
Okay, Hugh, I know you've come from a startup background, or you've worked quite closely in that ecosystem. Do you want to give your thoughts on the big tech question? And also, I'd like to ask you too, on the Asian front, is Asia really the halfway house between Europe and the US in terms of being able to foster innovation in the midst of perhaps a little bit less regulation?
Yeah, definitely. No, thanks a lot, Victor. So I think I've had the chance to have both hats. So on the banking side as a managing director at Citi, but also on the fintech startup side as founding partner of the largest fintech accelerator in Asia. And I think I'd like to broaden a bit the question to not just big tech, but fintech startups in general, because I think we might miss a lot of what's happening if we forget about the fintech startups. I don't know if everybody knows as part of the audience, but we have an observatory of what we call fintech unicorns. So the largest fintech companies in the world worth more than $1 billion. Today, there are more than 200 fintech unicorns. Last year was 100, and a few years ago there were not that many. So the acceleration that we're seeing in terms of fintech startups becoming very, very large players is just humongous. And of course, the Stripe and Adyen and all those companies which are worth pretty much $100 billion. So starting to be very, very large. And I think that if we think at what is happening in finance, that's pretty much the same innovation process that we see in all industries. What we like to very, very simply simplify into what I call the Amazonification of finance and the Facebookization of finance. Amazonification of finance is cheaper, better, faster. Something that we know really well in financial services, but just better, cheaper, faster by using digital tools, a lot of the innovations. But the Facebookization in finance is much harder, is things which didn't really exist before, which thanks to digital now exist. Typically, Bitcoin, cryptocurrencies, etc., would be the Facebookization of finance. What is the challenge of that when we think from a regulatory standpoint? And I give you an example. We're currently working on the Fintech Job Report. The Fintech Job Report, we're looking at 40,000 jobs of Fintech startups in the world and trying to understand where it is. I'll jump directly to the conclusion, and I can tell you that Fintech is not finance. Fintech is tech. So if you look at the jobs in Fintech, 90%, 95% of the jobs in Fintech are not finance jobs, that jobs. And that has huge impact in terms of what is the DNA of a fintech company. It's not a finance company. It's not the same way of thinking. It's not the same vocabulary. It's not the same mindset. It's not at all a finance company. So if you think of a fintech company, they're really tech companies. So the vocabulary would be the same as a tech company. Words like SEO are part of fintech. They're not part of banking, for example. And so it's really, really important, because that means that from a regulatory standpoint, there's really a gap there's a huge gap between those companies which are really tech companies, which think like tech companies, which don't really have a DNA of finance at all, and regulation that comes from a finance regulation standpoint. And so I think that's a lot of the tensions that I see at the moment. And I think some of the risk in the future, which is this gap between those companies which are really tech companies, which don't necessarily understand finance, just because 99% of the people in those companies come up from a tech background, and the financial regulatory side. And what we see, of course, is that that's exactly what we saw in Asia. You mentioned Asia, but all those Alibaba and Tencent and Grab, all those companies are at the core e-commerce and tech companies, and they have naturally expanded into finance. But the way they do finance is through their own DNA, which are pure tech.
Okay, so let me move to another question. What are and several of you have already raised a number of these points. What are really the core concerns regulators have around the systemic risks arising from these new fintech companies, including big tech? So I'm going to throw this one out there. Reference has been made to MiCA and so forth. Andres, do you want to go ahead and take this one? Start off.
Yeah, sure. I think. Well, thanks for the question. I think many issues were already mentioned here earlier, but it is really about providing a regulatory framework that is sort of resilient enough to take on board all those various initiatives that are taking place. And I think in my view, it's really about seeing how we can make sure that the principles that are key and that are the cornerstone of the existing regulation in the financial services, that those principles are also respected by all the other players coming into the sector. So it has been mentioned earlier, the rule of same activities, same risks would require same rules, and I think this is something that should be always on our mind when we discuss the regulation. In terms of main concerns, when we, for example, discuss MiCA or other related legislation, and I think it will be the same case also for the digital legislation that was mentioned by Jörg Kukies, the Digital Services Act, the Digital Markets Act, the Data Governance Act. I think those will be all sort of indirectly translating these principles into regulatory practice. And I think the key here it's to sort of make sure that what we're trying to achieve in terms of consumer protection, investors protection, but also data protection, the cyber resilience, issues like the sort of consistency of the financial services that are provided, in terms of anti-money laundering and counter-terrorism financing legislation and the framework we have, that all these principles are sort of respected also in the upcoming legislation. As it has been mentioned, we are currently discussing in the European Parliament the markets in crypto assets regulation. Extremely complex and detailed proposal, but this is exactly what is one of the key actually concern and key issue that is part of our discussion. And then obviously, when we look at the systemically, when you look at the regulatory framework in terms of financial sector, guaranteeing the financial and monetary stability, we have to also make sure that these issues are taken on board, especially when we look at some of the initiatives that may have global size, that can have significant size in terms of the market capitalization and also the market itself, and then I think that we should be also able to react to that. So I think that is the list of, let's say, the main concerns that we're trying to address, but there will be definitely some more.
Okay, Sultan, we haven't had a chance to move to you. Any of your thoughts on either the systemic risk question or even the regulator question globally?
Well, maybe I can blend them both into one answer, and I'll make it a multi-part since that seems to be the theme. Lots of good comments from the other panelists, but I would highlight one thing that it's important to note is that significant technology activities in the financial sector has occurred for decades. Just in the United States, there are tens of thousands of technology companies providing access either as infrastructure for financial services firms or offering financial services products themselves. And markets have already been disrupted in the United States over the last few decades, from the equities markets to consumer mortgage. So this isn't a new thing, and I worry a little bit about shiny object syndrome, where we focus on one specific technology or one specific subset of products or services that are years, in most cases, away from mainstream adoption. So that's kind of comment number one. Comment number two is, as we look to this massive technical evolution that's going to occur over the next few years, whether it's as a part of implementing large-scale artificial intelligence in the back office or quantum computing to enhance cyber resilience against negative offensive actors, especially state-based ones. We are in a moment where we have a lot of work to do, and I will just leave you with one phrase that really does spend a lot of time in my head, which is around securing the digital supply chain for the future in such a way that we aren't forcing ourselves into a concentrated risk where there are only 3 or 4 vendors that provide these, but that there's a robust open market. And this is where free market capitalism, I think, is our friend, where we use standards, where we use a lot of the infrastructure that was created to create an open internet over the last few decades and use that to ensure that there's an open competitive market in environments that support it to keep a robust infrastructure of organizations out there. Right now, in some areas, there are less than 10 vendors that provide specific pieces of technology in the system today. And so we really need to get out of that situation. It needs to be many tens moving forward. And so as a regulator, I think very focused in terms of especially these new technologies, especially AI, especially quantum, especially automated multi-party workflow, the baseline standard. These are things where we have to position them for 3, 5, 10 years in the future. We can't just be as reactive historically as we can be. And being reactive is going to cause us to make all the same mistakes that have led to the same kind of concentration and risk issues that exist already. So there's my multi-parted answer to your question.
Okay, well, all of you are blowing up my question list because you're moving, just as is typical, into all these different areas. Okay, so I'm going to come back to the global standards question because obviously this is going to be quite crucial. But Stijn, Dr. Kukies, I know both of you have very strong feelings about systemic risk, and you were mentioning them, everything from stable coins and so forth. Stijn, do you want to go first? I know you have some very distinct thoughts on this.
So maybe just to step back a little bit, yes, regulation is going to have to be a big part of the response, but it's not the only part, right? And we also have to improve the system as it is, and because partly what we observe is a response of the consumer that they find these services attractive and useful. However, not necessarily considering all the risk. So we need to improve the payment system, for example, as it is. Many countries are doing that, and I think we can further enhance that both on the national level. Some of the agencies here at the BAS, the CPMI, is a committee that's working on improving also the cross-border part of it. So how do you make it easier to exchange between various countries, currencies and remittances and what have you? And I think partly that requires a little bit of an innovative mode also among the central banks and other agencies that are involved in this space. We're trying to help there as well. We have an innovation hub where we bring these people together, talk about technology and standards that can help, let's say, in the messages and what have you of interlinking payment system. Because that is also a way to mitigate kind of the pressures that coming from the user that wants this basis. Having said that, regulation is important, and we are putting in place some pieces of it on the crypto side specifically. You can talk about that. The CPMI, IOSCO, which are 2 of the committees that are engaged in international standard setting, have come out with a report last week on stable coins, how because they mimic in some sense a payment function that was already regulated by them to what they call the principles for financial markets infrastructures. They now have come up with some guidance. It's out for consultation that can help create a global standard on how you would want to regulate these things. There are many details. We don't have time to get into it. It's about governance. It's about risk management. It's about the standard things of making sure we also have a level playing field around the world. But that is an example of where we can collectively make progress in this area. I'm optimistic there. It's not the only piece, however. More needs to be done. We know from FATA, from AML, etc. A lot of work is already underway. The Financial Stability Board, we haven't talked about that, but again, it's an agency that's pushing for that. So working together, I'm optimistic, but it's not easy. Let's put it this way. We have history, it can be done, but sometimes it takes a crisis. Let's try to avoid the situation that we have a crisis brewing here, and only then do we make the necessary steps.
Dr. Kukies, and I know you're a MICA expert, so MICA and stable coins.
Yes, I think what Stijn has said is all of these points I agree with. What I would add is the topic that I mentioned at the beginning, the risk of crypto fraud. I think that's something that more and more is becoming an issue of concern, where at the beginning the view was the usage of crypto assets isn't sufficiently large yet to merit a categorization as a financial stability risk, but I do think with the adoption rates and the volumes increasing very substantially, that's something that we are monitoring very carefully. And as Stijn has mentioned, FATF, I think the important point for the global community is to make sure that we implement the so-called travel rule quickly and strongly, namely the obligation for those who provide transfer services of crypto assets to be able to identify both sender and recipient. I think that's extremely important. We in Germany have implemented that with the beginning of this month. There's European legislation on its way. There's a global consensus on this. And I think that's one of the extremely important points sort of at the intersection between anti-money laundering, terror finance, combating activities, and systemic risk in our systems, where we have to make sure that the rules and regulations that we apply for standard transfers of money also need to be applied for crypto asset transfers. And then on the systemic risk side on stablecoins, I think the MiCA approach, I think, is the right one, namely to say that we want to set up a framework that is acceptable and manageable to identify what the minimum standards are for the assets held against the issuance against stablecoins, for the transparency obligations of the collateral held against stablecoins issued, for the rights of consumers to access the collateral. All of these things, I think, are extremely important, and some of the news flow over the past few days have shown are highly, highly relevant issues, where we have to make sure that we oblige anyone who calls themselves stable coins to also adhere to standards that avoid potential systemic risk. And of course, the last but not least topic that the BIS is working on, we are working on in the ECOFIN, under the leadership of the European Central Bank, is of course the questions of what financial stability risks do central bank digital currencies potentially come with. And I think that's one of the issues that we're looking at very carefully. The ECB has made some very interesting analysis on how to potentially avoid systemic risk coming from CBDC through capping the volumes or introducing tiered rates as a solution. That's something that obviously the ECB is looking at very carefully, and where we are accompanying the very innovative work of the ECB to make sure that we also supply potentially the legislative framework that's necessary. And I think that's one of the other issues, and was the first topic of discussion among finance ministers, is that, of course, we don't only look at central bank digital currencies in our own currency area, but also think about the interoperability and the opportunities and the risks that comes with it. how we think about making central bank digital currencies interoperable at the global level, of course, and how we get into a collaboration in all of the fora that Stijn mentioned to make sure that we both take advantage of the benefits of interoperability to, for example, reduce potentially the cost of remittances and make the payment system globally more efficient and cost effective. But on the other side, of course, also address the potential spillover risks that entails.
Okay, well, that's a good segue into global standards. How do we get there with all of the different topics all of you have mentioned from CBDC onwards? So how do you get everybody to the table? If you take where I'm sitting in China, where China runs a closed data garden and has a very distinct approach to data and came out with its own Chinese version of GDPR. Even if you look at it from that small piece of the puzzle, I want to open it up to all of you. How do we continue to push that across the regulatory framework and so forth? Anybody want to go first? Otherwise, I'll pick on somebody. Andres?
Yes, thanks. I was so sorry. I was actually about to raise a hand. No, just very quickly. I think much has been said. It's actually a very good question, and you know better than I do. I think that it's always very hard to get our partners around the table and discuss those issues. But I remember when I was drafting in the European Parliament the report on the digital finance, we had exchanges with the European Commission, and for us it was actually important that the EU as a whole is represented on a number of international fora, so that these talks actually do take place, and be it on really various platforms that are available for that. And I think obviously that's again one part of the homework. The other part, I really believe, and I think the GDPR regulation can be one of the examples, that if we set rules that are workable, that are credible, that are actually enforceable on the European level, that apply rules that apply to the entire European Union, all the 27 member states, and obviously those member states who would like to do business, who would like to actually carry out their activities also, be it with their European counterparts or on the European market, they have to comply with those rules. And I think this is also sort of a positive motivation by example. And I believe if we do, for example, if we get the marketing crypto assets regulation right, and it really provides what we actually ask for from it, then I think it can be also one of the sources of inspiration for the global talks and for setting the standards on the international level. And then obviously not to leave out any opportunity. There has been discussions under the Trade and Technology Council between EU and US. I think this can be part of the topics on the table. There has been the discussions also with other counterparts, be it under the trade or investment agreement. So I think there is possibility to do it. It has to be sort of a comprehensive approach, but I think we should also really start doing or showing the examples by setting the regulatory framework properly on the European level.
If I can
Anybody
add,
else?
perhaps,
Go ahead, please.
yeah.
You.
If I can add perhaps to that, and to totally reflect on what Andre just said, open banking and PSD2, I think, was a very, very good example of this. When we look at open banking and PSD2, that was really driven in Europe, and really in terms of the whole, let's call that framework and thought leadership, managed to put in place the bricks, the terminology, what was behind. We can clearly see the impact that it had on the rest of the world, whether it's South America, the Middle East, Asia, in terms of around it, and let's call that after that the cross-border collaboration. So I would say in terms of regulation, of course, it's really difficult to have the same regulation across the world. But in terms of having some kind of harmonization and even just the same terminologies, the same vocabulary when we talk about TPP, then now I think it's commonly accepted that TPP is a certain type of entity, and that's a place that it has in the whole value chain of open banking. I think those kind of initiatives work really well. In terms of closer cross-border collaboration, we've seen much more, for example, in Southeast Asia, for example, let's say between Singapore and India, and the connection between the real-time payments of UPI and Pay Now. We're starting to see this, but of course, it's much more, I would say, local. And I doubt that we'll see those kind of real-time payments across the world in the near future.
But let me push you guys a little bit further. Where is the global standardization most likely going to come where you can pull together common interest? I mean, we're regulatory heavy on this panel, and if I've got clients who are running around forum shopping, noting that if they get out there in some of the less regulated areas, environments around the world, and they can push a technology and get a network effect going, that is actually going to create a significant degree of innovation quite quickly. So where's the low-hanging fruit on the global standardization? Where do you think that common interest can be established?
I think I mentioned already some areas in which there is collaboration very actively ongoing, right? And we mentioned FATF, FSB, CPMI, OSCO. So we should build on those and enhance that. That's not going to be sufficient. And you mentioned already data and data governance thereof. And that's an area where we don't have those mechanisms in place as of yet. That's even true at the national level, of course, but because who controls, owns data is amorphous in some countries. And that gets really problematic when you think again about the big techs entering it. So we need to have that agreement. I mean, are there models out there? I know small countries have gotten together. Chile, Singapore, and New Zealand, for example, have something called the Digital Economic Partnership, where they talk about control of data and the governance thereof. Those are micro examples. Can we build on those to improve that? I think it's feasible. In a longer term, but we really need to think about what is it exactly that we want to regulate, right? Data is not something you own, you can control to some extent, and we do want to allow for some exchange because it's beneficial for economic activity and what have you. So that this for me is the big gap at the moment.
Yeah, Victor, if I could just add one comment as the one technologist on this panel, we need to be pretty clear that there's a massive separation between regulatory standards and technical standards. And in a space where there are no technical standards yet, I think it's dangerous potentially to rush to regulation in certain areas. IETF, WC3, these are all things that have established global standards and technologies that then people can build regulations around. And I think especially as the technology is moving so quickly in some of these areas, I would focus on technical standards potentially in advance of regulatory standards. A number of shiny objects have been talked about on this call that are still highly dynamic, very fast-moving technologies that haven't standardized yet, right? You get 6 regulators in the room and you're going to get 7 definitions of stablecoin as an example. So, I would suggest that, we can make use of existing infrastructure around technical standards, public-private partnerships, et cetera, that give us opportunities to maybe move that technical needle forward a little bit before we start, slapping inaccurate regulatory language around and trying to force things at an international and governmental level.
I think that's an extremely important point. I mean, we always call it technology neutrality, and that's something that is keeping us busy, specifically on MiCA, is how to accomplish that. Because I think nobody on the regulatory side of this call pretends like we could cross swords with you on selecting the technology that should emerge victorious, but on the other side, of course, we want to set a framework that allows market players to innovate and to find out what the best technology is, but it's a little bit of it's a big balancing act, of course, to make sure that the rails are set, but that we don't intervene into the private sector allocation decisions of capital and innovation and ideas. I think that's where we have to be careful, and those are the things that that we try to balance as well as we can, and to set level playing field.
Yeah.
Well, what about CBDC? Do you think there is a common framework?
Well, on CBDC, I think also the balance that we have to strike is, on the one side, take into account the financial stability risks that are very obvious from the potential flight to quality in a potential crisis. But you know, I think we also at the same time have to be careful that we don't over-engineer it by thinking only about the financial stability risks, because to me, the equally relevant risk is that we spend a huge amount of time figuring out CBDC architecture, but then nobody uses it because the private sector has innovated so much that you know, the use cases of the CBDCs just don't exist. So I think the central banks also have to be cognizant that they can only provide a framework around which private sector participants then innovate, and I think that's the challenge to the CBDC discussion, that we don't only focus exclusively on the risks, but also think about how we actually get people to use it. Because the worst thing is, you get a CBDC that nobody uses while markets are calm, and when a crisis erupts, everyone flees into the CBDC. That would certainly be the most disruptive and economically inefficient way to go.
Yeah, I agree. I mean, the CBDC is very much a means to an end, but you really have to define what your goal is and what is the use case. That's not always clearly defined. Is it a early substitute for cash? Is it financial inclusion? Is it reaching out to those you couldn't have fiscal transfers to? And all of them are legitimate objectives, but they have also different designs in mind. And central banks, if they're going to issue those, are only going to provide the very backbone in the back. They cannot do the user interface and all the technology. They're not equipped to do that. So it has to be a collaborative effort, regardless of CBDCs. So I really think of it as can we develop it as a platform that allows for a fair competition, and on top of which can be other things can be built, including programmability and what have you, that the user in the end may be asking for. That's not a task for the regulatory community, that's for the private sector to innovate, but the stability is something that the central banks have to guarantee, of course, and really think ahead. This is only going to have one chance at it, so it has to be done in the right way.
And just to add, that's precisely why I think the linkage from central bank digital currency into tokenized commercial bank money that can have all of these programmability aspects that can really drive innovation is extremely important. We did a task force with our leading industry players, and the use cases being developed for programmability of currencies is extremely interesting. The other point that we haven't raised yet, I think that also ties into this concept, is to develop further the self-sovereign identities, i.e. digitize identification methods provided by sovereign entities that could be another wave, trigger another wave of innovation that could be very interesting, I think.
Okay, so Dr. Kukies, I'm going to throw another tougher question out at you, and I'm not going to put Sultan on the spot being the only U.S. participant here, but you talk about tokenization, and tokenization, fractionalization, and I'm a U.S. lawyer, gets into all the securities. Is this a securities question, right? And how then do you protect the less sophisticated investor in dealing with these potentially, how should I say, financially embedded products? So how do you keep that balance? That's a tough one, but I'm going to throw that out there to all of you. Okay, no takers on that one.
No, I mean that's precisely what we're trying to do with the legislation, for example, in MiCA, right? I mean where is the boundary between a financial product? How do we define all of these things? How do we then supervise them? How do we make sure the issuance process, the custody process, the settlement process adheres to the stability rules that we established in the securities market, for example? That's always a useful analogy, but of course, because the line between e-money, stable coins, securities is sometimes still uncharted territory, we always have to be very careful to avoid the mistake that Sultan has mentioned, namely to sort of rule out certain technologies while we're making the rules. That's the balancing act, I think.
Okay, great. So as we're approaching the last couple of minutes here, I'd like to throw it further open to all of you. We started off talking about what keeps you up at night, what gets you excited. Now, having heard from each other, is there anything else further on your list that you want to go ahead and throw on the table?
Yeah, perhaps if I can start. And so listening to all my fellow panelists, I think fully agree on all the points that you mentioned in terms of the need for regulation, what needs to be done. I think I'll add one. And you remember, Mark Andreessen, a very, very long time ago, was saying, software is eating the world. And of course, he was not totally right. We're went into a world of software. What I would like to say, and what we say at CFT, we say tech is eating finance. And I think this has happened, and this is really happening. Finance, for me, is a tech industry. Just like pretty much all industries have become tech industries. Just like, for example, the largest retailers in the world is Amazon. Is Amazon a retailer or is it a tech company? But that, I think, is really, really important. It has a lot of ramification in terms of the way we regulate. It's really, really different. Those companies, those hundreds of fintech companies which are worth more than $1 billion, they're not finance companies. And I think it's really important. They're not thinking as finance companies. They don't have the DNA of a finance company. They're tech companies. In terms of the skills, the people who work in, it's much, much easier to move from Uber to a fintech startup than to move from Citibank, where I used to be, to go into a fintech startup. There are a lot of ramifications from this, and I think a lot of blind spots that I think we have on the regulatory side. For example, Facebook that went down and people couldn't use their Instagram. Of course, a lot of people complained. But what about the whole payment system? That's much less good. What about if you lose all of your money because of some cybersecurity issues? I think those are the really, really critical issues we're facing today as we're moving to a world of digital finance. And it is moving much, much faster than what any of us can think of. So of course, all the, let's call that what I call the Facebookization of finance, CBDCs, the world of cryptocurrencies, that will come, but I think that will take time. I would say much, much more urgently. Today, the world of finance is a world of digital, and it is a world of tech. And I think the blind spot that we have is that we're really coming too much from a world of finance, because we have to think of it through the angle of technology. I don't know if anybody would agree on this, but having been in those different worlds, and I'm very, very convinced about that.
Yeah, I actually agree 100% and would probably extend it even more to say that, if you're thinking about hiring, you're thinking about bringing people into your organizations and you're going down this digital journey, I'm a professor, and one of the things that I tell my students is it's great to have functional domain experience in finance or macroeconomics or whatever, but if you don't have at least as much expertise in tech, you're not going to be able to actually do your job. And as we go, we get through Gen X, which I think most of us are here, and we get into the millennials and the next generations, they're going to be predominantly digital actors with domain experience, kind of as parallel to that. And moving through this, the digital haves versus digital have-nots, which was highlighted earlier, is a real issue, not just from an entity perspective, but from a human capital perspective. So coming back, we really need to ensure that conversations like this in rooms like we are all in on a daily basis have people with technical expertise in them, because we cannot separate what we're trying to accomplish from how we choose to get there, which I think Dr. Kukies and Stijn both highlighted quite well. But we have to get to a point where, there's actual technologists in the room having these discussions. And without doing that, I think we're going to potentially open ourselves up to lots of errors that we will have to then go back and fix years later.
I couldn't disagree. I couldn't agree more, because we're trying to do that a little bit in our BS Innovation Hub. We've been hiring technology people, but it's a scarce commodity, unfortunately, and they're not easy to get. But we realize we have to do that. You asked about other gaps. I mean, I mentioned the data governance gap. I think that is a serious one that we really need to come to grips with. What agency is out there? I don't know. There's intellectual property right agencies that get into these issues on a global level, but we should really work very hard to make that happen. The other area I would say is competition policy hasn't caught up either fully with the new developments, right? And that applies not to big techs in finance only, but applies to big techs more generally. Unless we have a clear paradigm there, again at the global level, it's going to be hard to operate some of these things, right? Because we know, and I will go back to my entity-based approach, we sometimes have to get to regulate the entity of the big tech, because they have both competition issues, but also financial stability issues. So we need to see that balance in the right way. We're not there yet.
Okay, everybody. Well, as we wind up, I'd like to thank everybody for their thoughts. The whole RAID conference is all designed to pull people together from across the world, because as each one of you have mentioned, this is a not only a global phenomenon, we need to go ahead and address this both locally and globally. So with the last couple minutes, if there's anything that anybody else would like to conclude, pass messages to the audience, the floor is yours. We've got the last 4 minutes left.
I think the point that you made is extremely interesting. Who is eating whom? I mean, I attended a session yesterday where an academic showed the global price book ratios in different industries, and surprise, surprise, the technology industry and the classic financial industry are at opposite ends of that. So it's pretty clear how the market views things. And of course, there's now a separation within the classical finance industry, because everyone is looking at that and saying we have to redefine ourselves as tech companies. So I think that is an open question on where that goes, and we're trying, of course, with the digital operational resilience legislation, trying to make sure that that process happens in an orderly way, because it's obvious that that the aspiration of those who are trading at low multiples will always be to reach the higher ones. So the transformation process is not very surprising. On the other side, we're hiring, right? I mean, what Sultan says is falling on very open ears. Both at the ministry level and the supervisory level, we are trying desperately to hire technologists. But I can only echo what Stijn says. The public sector is having a really hard time attracting those who can really compete at the highest level there. So anyone with an interest in transferring knowledge is highly welcome, and I think all supervisory bodies are interested in facilitating that transfer of knowledge.
Perhaps if I can add to that, because
that in saying that, I mean, the digitalization is affecting the existing players, incumbent players, of course, as well. We didn't talk as much about them, but many of them have a difficult time to catch up to the frontier, and they may never be able to, given the investments needed. And then there's the risk that they become kind of a utility in which they provide some of the back office services on the payment rails or what have you. But that's going to come at a cost to society at large in terms of the intermediation. let's put it this way, if through the pandemic we would have had only big techs providing financial services, I don't think we would have had the outcome on the economic side that we have seen. So we would want to preserve the strength of the banks. I'm not going to say we should protect them. Yes, they should be exposed to competition, but they do provide an important service that we need to preserve.
And perhaps adding on what both what you said, Stijn and Jörg also, of course, now hiring technologies is necessary, but it's hard. There's something which is much easier, is making sure that everybody in finance can speak technology, can understand tech, and have the basic foundations. And this is much, much easier to do, which nobody does, I would say. You were talking about large financial institutions. When they spend, for example, $1 billion in technology, they don't even spend 1% of this to train their employees to understand what is technology. So I think if there was a very simple leverage, it's about upskilling existing people rather than just trying to get technologists to get into financial services.
Okay, so that brings us close to the end. I'm going to try to get in the last word here because my gamer nieces and nephews wanted me to ask a question to the regulators. I don't expect you to answer it, but if you imagine a play-to-earn game where they are making digital currency within the context of a game, and they're able to transport it across the world to their friends. So much for your AML controls, your exchange controls, and so forth. I'd like to leave it with you as to, I would love to have a discussion as how each one of you as regulators would look at trying to deal with that form of cross-global currency, particularly when they're only 12 and 13-year-olds. Okay, with that note, thank you very, very much for a great panel. We could continue talking for quite a bit longer. But again, thank you very, very much.